Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Thursday, the 15th of February, 2024. All right, my friends, a couple of things. I'm going to have a live webinar next Thursday, the 22nd, at 12:30 p.m. Central Time. At any point during this, you can move your cursors to the top up here. There's a cursor. You give it a click. It'll take you to a page where you fill out a form. From there, you'll get your user ID and your password. Read the email you get from me. If you have questions on SPDR's ETFs, please write them to me there. I'll prep the charts, and then we get one of these fast rounds where I can bring up the charts, answer all your questions, and away we go. I'm always open to take questions during the live webinar, but it's only 20 minutes. If you're asking me to create charts on the fly in the thousands of stocks that are out there, it's difficult. I have all the futures ready to go. So please remember that and work with me on that. I have a lot of the ETFs ready to go too, but there's just so many stocks. You can't have them all with all the numbers that I want to put on the different key window envelopes and things. I can put Bollinger Bands and swing lines on anything, but getting the stuff in the right area is impossible sometimes on the fly. All right, so you know where we're at. We had the CPI number on Friday. It set the market down hard. And first correction, I feel proud of myself. I wrote people and I said, folks, this is just a correction. It's not the big from peak to trough where you sometimes get a 13% correction. It's probably more in the line of a 3 to 5%. And, you ended up about 2% to 4%, depending on the index that you were looking at in here. Now the question is for tomorrow, you're going to get your PPI. If it's a friendly number, friendly being the market says to itself, that CPI was the outlier. Inflation is headed down. The Fed is going to make those cuts come May, June, whatever the case. You'll probably make new contract highs in stock indices. If, on the other hand, the number's a hot number and it puts into question that, then this was a bounce back that doesn't set those highs, and then you start looking at this week's lows, and if they're taken out, you get into more of a correction. That's pretty much how I'm viewing what's going on. NVIDIA, you're starting to see a little profit taking. I was one of the guys today, and I don't mind telling you that if you get my full research. I have clients in, this is what we call the concept trade, from 448. I think it was December 4th that we were talking, putting that on. And today I had clients take another 10% off. Why? I want buying power on breaks if you get it. If you don't, they own a nice size position. In they are. So those are the things that you look at. And I've done that on some other markets. I don't want a lot of exposure in tomorrow. If I have to chase the markets, I will. But if I have buying power on pullbacks, if this thing goes the other way, well, then I want my clients in that position. It has been easier, and I'm telling you this, much easier to trade right now. The SPDRs and the ETFs that I'm working with, along with some individual stocks, and it has been the futures. But it's just how the week is gone. That's all that it is. But I think that everything else that you want to do, it's sort of fool's play as you do that. This is all going to be about 7:30 in the morning, the PPI. I'll do my best that after it's done, I'm going to get up early, be ready. I'll put out my morning update probably earlier than I normally do. I want to get that, see the reaction to it, tell my clients what to do, and then hop on, and I'll be on YouTube properly with that. You get housing starts at 7:30 and building permits. Nobody's going to look at that. All eyes will be on that. And then at 9, we're going to get the consumer sentiment. And I do want to see that. That I think, after the PPI is out of the way, gives us an idea what the consumer is thinking. Because if you look today, you saw that if you saw how the retail sales went, they are cracking. And I think that's important. The consumer pulling back a little. Yet for the first time, the New York Empire numbers for manufacturing were good. They're not yet a turnaround, but they're the best they've been in a long time. So that is important to look at. Now, cadence, it has not been able to fill that gap. And right now, the pattern is going to be one of bearish right here. You've suddenly got lower highs and lower lows. So the key in the market, as I see it, is 304.15 to get up into that 304.50 area, if you can clear that, to fill the gap. But if it doesn't fill it, you got to be nervous, because that means where you're going. Well, you're already at the key number, the 18-day average. So it probably either opens up this, or more likely the lower Bollinger Band at the 284.5 zone. So here's how I'm viewing tomorrow. Get over 304.15. You could even get up to 309.20, the upper band, if that occurred. Conversely, get a bearish report in the market, and you could go back down here before you take that high out. It's interesting that this is one of the first of the software stocks, if you think about it, that's thrown out and come in on an evening now with an actual sell signal. Would I tell clients to go into the numbers tomorrow? Of course not. But we'll see what the market does. Afterwards, I'm not worried. Momentum down, trend down. Until you take that high out, you can see why I'm saying that. Now, lift. With all the craziness that went on with the misprint at the beginning of the week, you're back up to where you were, the $20 mark. You added today 16%. Yesterday, the market was up 35. That's 51%. At its peak in the off hours, when the error happened, the market got up to, I think, 21, roughly 20, 30. And this is the aftermarket, so you don't see these on the charts. It was around $20, $30 to $21. So you've come all the way up there. This has been one of these things, and this is what this market has done. This market is looking for certain areas, and people have so much money, they're just jumping in. And I wouldn't even know what to tell you. I can tell you as a chartist, when you look back, you will say in a long-term chart, it took a long time, you bottomed out, all that sideways action where it congested in those narrow Bollinger Bands, and when the breakout happened, it just picked up and it ran. The option traders are probably the guys making the most money, not the individual stock guys. When you come to UGA, I would never tell clients to buy an upper Bollinger Band, and you don't have a pattern here I like. With today's action, you now have a lower low, higher high. You've never locked in the bullish momentum the way you did back here when the market was coming up into all this area. Now you've again gotten overbought. But again, how bearish do you want to be going in for the spring? I don't want to be overly bearish. Gasoline prices aren't that high. People are employed. They have money. They're going to travel. And the market will soon start to switch over. Now, remember, in America, we shut down our refineries. It sounds crazy, but that's basically what happens. And you convert from winter to summer blends. Just think of it that way. And that's what they will start doing very soon. Now, that'll hurt the demand for crude when that happens, but you'll pull out of stocks gasoline and heating oil because the markets build up for that. When you look at XLF, the financial services, they're powerful. I mean, I'm surprised at how strong they are. But this is over the upper band. That is strength. You had it here. This market is stronger than it appears. And that doesn't mean that the pattern is one where you buy over a Bollinger Band, but you have a lot of strength in this market. In XLI, to my amazement, the market keeps going up here. I say amazement. I'm the guy that was talking how weak industry was, yet here's the industrial sector, and I swear if you have my morning updates, this is one of the ETFs that I've still got clients in. And I'm looking at it, and I went to them this morning, I said, wow. Even I am surprised at how good it is. The chart action held together and the embedded reading has done its job. It's that simple. If you understand embedded reading and Bollinger Bands, that's it. Do I have any control over what PPI will do tomorrow? None. But I've already had my clients take some money off the table. Then we get to AMC, and I am more convinced than ever, as you know, that we've seen a low in the market. Now, that doesn't mean that I'd be telling you, hey, go out and buy this over the Bollinger Band, but nothing will surprise me to the upside. I mean, remember, you got to 363. This was $40 after the reverse splits, right down to this number. there is, I don't know how high it can go just in a bounce configuration, but I do know that you probably have a lot of people that want to go to movies. We've had not very good movies coming out. They're all poor right now. That'd be the way, having owned the movie theater, I can tell you, this is poor. This is not the time of the year where you get your big, really good movies. They'll start later in March. Then they start picking up through Easter. And then when the kids get out, you got to throw out everything you've had in the can. And a lot of these movies were made, they've been in the can, they just haven't released them yet. RSPD, the consumer. Has the consumer faded or not? We're getting some early signs that, yes, they have basically faded on us. You're starting to see it in retail sales. I'm looking at it. Redbook, it wasn't 5% the way that it's been since the beginning of the year. It's 2 and 3. Now, today's retail sales, I thought were disappointing for a reason that nobody's mentioning. I think the retailers went into the holiday season in very good shape in terms of inventory, which means they didn't have to put out deeply discounted sales. We always get at Super Bowl, as you know, TV sales. That's the big item. Walmart owns that industry, and away you go with that. But if you looked at the rest and the disappointment there, I get it. Plus, you know, there's another thing going on for the consumer. Have you gone out for dinner? Do you have any idea how expensive it is to go out to dinner? Chicago, New York, LA, any concept. It's no longer fun. It's no longer you and your partner are going to go out and, it'll be 50, 60 bucks, 70 bucks. Yeah, a person. You heard me, a person. It's changing. And I warn you, the service industry, because of all these increases that have come in both labor and food costs and the going up of rents and so on that these restaurants get, you watch. You're at the beginning thralls of the service industry being, I think, in a serious issue. I think if you look down the road, this is where the problems start showing up in that. In the home builders, I don't see problems. You've heard me say that all the way through. These are not existing homes. The guy walking in is handing it to a home builder. He'll figure out with you what to do about mortgages. We've already gotten adjusted to a 6.7% mortgage. Unfortunately, jumbos are well over 7%. You've got to either be well-heeled, put down a lot of money to build a house, or build a smaller house. Mega mansions are probably out. In the energy sector, as we look, all right, this is about the Mideast in a large way. As I expected was going to come out, we had earlier on Tuesday, we had OPEC come out and give you all the reasons that they are bullish. China's going to recover, rate cuts are going to happen. Today we had the IEA come out. China's not recovering very well, maybe not going to recover the way people think, and interest rates higher for longer. The exact opposites. Production may be dropping a little, but so is demand. So got to look at all these things as to what you see, and I think they're very, very important. You're at a resistance zone, but the market has been exceptionally well contained between the red line, the 18-day average of closes, at first up to the 200-day, and then with today's action, finally, up to the 100 and the upper Bollinger Band. I don't know that it can go that far from here. It probably needs an event for that to happen in the way of disruption to energy, and that could happen. I don't know if you're watching Israel and Lebanon, what's going on, but Hezbollah and Israel are getting more aggressive towards each other. This is not good. Every night we see, unfortunately, more death. Today it's a hospital in Gaza, and there's more and more of it. Somewhere along the line, we need this to end. How? I'm not good enough to tell you that. In GLD, lower highs, lower lows, and you stopped where you should on the break. The 100-day average in the Bollinger Band. I'm a broken record here. If I've done anything to teach you, you look at those and you learn to take money off the table. And that's exactly what I think happened here. That's the first time you've done that in how long? Okay? Back here, you had to go to last November. That doesn't mean gold is suddenly a bull market. Gold's problem is going to be tomorrow. PPI, it's already had the CPI. If interest rates stay higher for longer, that's an enemy. And if the dollar goes up, That's it. I thought today was a bear market rally in the yen, the Swiss franc, some of the other markets. We'll see if I'm right or wrong on that. Then we get to silver, which is acting much better than the gold market. The gold-silver ratio is flip-flopped. And this market you can see here, our last challenges here, that was only 48 hours ago. All of a sudden you're at the 100-day average. So I like that. Copper's probably going to come alive a little bit. Why? Lunar holiday, over. Chinese will start returning to work tomorrow. It's a one-week holiday, it's there. So they'll come in, are they going to start buying copper? The factory's going to gear up. Do they need more material? It's not the time to be short. And I said that to you at the very beginning of the week. I said I would expect short covering, and then we look to see what happens as the lunar holiday ends. You're there. So we're going to get a pretty good idea tomorrow as to what goes on here. BND, it's all about tomorrow. Don't be a hero. TLT, BND. Let the market do its thing, and then we'll take a fresh look at it. In the dollar index, you tell me that the Bollinger Bands, every time you're hitting it, hasn't given you an exit spot on this market. And then on the pullbacks, if you have an embedded reading, you step in. Now, we don't have an embedded reading. So my work says, okay, Ira, on the ETF here, you probably want to be a looker, not much more. And as we take a look at FXE, you're back to the resistance point of the 100-day average after 2 days ago, hitting that band. And where do I teach you to take your look to come out? So you put it together, and we can talk about this because we're going to have our What's Up Live webinar. And that webinar is this coming Thursday, a week from today. So I'm giving you a week now. You have to sign up. The seating does fill. And when it fills, you're locked out. You'll get a user ID and password. You move your cursor up here. If you're on my mailing list, I sent it to you. Reserve your seat. And if you have questions on SPDRs, ETFs, and stocks, please, please, please. You'll see when you get your user ID and password in there is a link. Click it. Tell me what you want me to cover for you. Don't give me a list of 50 stocks. I'm not going to put them in. So give me your best one or two, and I'll try to do that for you. I get some people that'll write me a list. I'm not going to do that, all right? That's not how it works. I have another 50 people with them, and I'm only going to cover X amount in a 20-minute period with futures. So it's very fast moving. I open at 12:15 p.m. Central Time, the webinar a week from today. I start promptly at 12:30. I end 20 minutes later, and no, there is not a tape that you can see. You either make the time to come or you don't get it. It's really that simple. I'm Ira. You have yourself a good evening. Remember to click up here at any point, and I'll catch up with you all tomorrow. I'm going to try to do the YouTube video in the morning earlier than normal. I want to catch the PPI action with you right afterwards. Okay? Take care.